Hi class, welcome to this course, Auditing and Assurance Principles, Auditing Specialized Industries. For our first topic, we will discuss auditing the financial statements of bank. So although this topic is divided into two parts, so this is the first part. So wherein we will discuss the framework upon which the auditor conducts audit of financial statements of a banking institution. So in this particular topic, we will discuss the background of a bank and the banking operations and how we can establish or design our audit objectives, procedures related to audit of financial statements of a banking institution. So the second part of this topic, we will discuss the specific audit procedures as applied to specific financial statement line items of a bank. Okay, so for now, we will first discuss the basic or foundation of the concepts related to audit of banks' financial statements. So for that reason, the following will be our learning objectives. Okay, so at the end of this particular module or topic, you should be able to understand the importance of auditing the financial statements of a banking institution and including the accreditation requirements for external auditors of banks. So you should also be able to explain the nature of banks and the banking operations and distinguish the activities of banks from other commercial institutions. Next is to identify and explain the considerations of an auditor in an audit of bank statements. So in this particular part, we will discuss of the general considerations of the auditor. And then later on, we will discuss the objectives of the audit in the context of the audit of banks' financial statements. And finally, similar to learning objective letter C, but in this part, we will identify and explain the considerations of the auditor when it comes to planning and performing the audit of banks' financial statements. So this will be more specific. So compared to the general consideration that we will lay down in learning objective letter C. So to proceed, let us begin with learning objective letter A, which is understanding the importance of auditing the financial statements of a banking institution and the accreditation requirements for external auditors of banks. Okay, so background. Banks and other financial institutions are very important pillars of our economy. Now, for instance, the general public place their money or hard-earned savings in banks. So money can also be transferred from one place to another. So through banks and other financial institutions like money remittance centers. And banks generally provide funding and financing both to commercial companies or entities as well as government. Okay, so those are some of the major functions of banks and other financial institutions that make them a very important part not only of our national but as well as international economy. Okay, however, for banks and other financial institutions to function smoothly, they need the trust and confidence of the general public for them to discharge their responsibilities effectively. So that is why the stability of the banking system, both national and international, has become already a matter of public interest. And for this very reason, banks and other financial institutions are subject to very stringent regulatory supervision by different government agencies such as the Philippine SEC, the Bangko Sentral ng Pilipinas or BSP, so particularly BSP, so and Insurance Commission for insurance companies, so which is also a type of a financial institution. Okay. Now, in addition, the role of external auditors for these special entities should not also be taken lightly. So users of financial statements of these institutions rely on the credibility that us external auditors lend on the financial statements of these entities. So for them to make decisions and in maintaining their confidence in the banking and financial system. Okay. But the problem with those entities, the banking entities and other financial institutions, is that they have unique operating environment, which is much more complex compared to other commercial entities like trading or manufacturing companies. Okay, for one, they engage in a huge volume of transactions, many of which are being done in an automated manner. So making them, banks, highly dependent on reliable information technology systems. Such situation will normally create a challenge for us, auditors, so because of the possible lack of the traditional audit trails in those particular systems. Okay, so that is why a lot of our discussion will revolve on how we can create a workaround, no, on auditing, for example, financial statements of banks or the assertions found in the financial statements of banks if we cannot find traditional audit evidence that will support the items on those financial statements of banks and other financial institutions. But for this module, we will focus particularly on audit of financial statements of a bank. So we will have a separate module to discuss the nature of other financial institutions such as insurance companies and other activities of the bank aside from their primary operations. So next part, we will discuss this supervisory body that is in charge of overseeing the different banking institutions here in the Philippines. So which is the BSP or Bangko Sentral ng Pilipinas. So BSP or the Bangko Sentral ng Pilipinas is the central bank of the Republic of the Philippines. So it is our central bank here in the Philippines. So it was established on July 3, 1993, so pursuant to the provisions of the 1987 Constitution and the new Central Bank Act of 1993. And finally, the BSP enjoys fiscal and administrative autonomy from the national government in pursuit of its mandated responsibilities. So the next question is that what are those responsibilities of our BSP? So first up is to provide policy direction in the areas of money, banking, and credit. So as you can see, normally it's the BSP who handles the monetary policy side of our country here in the Philippines. So they also supervise the operations of the banks and to exercise such regulatory and examination powers as provided under Republic Act 11211 or the New Central Banking Act or Central Bank Act and other pertinent laws over quasi-banking operations of non-bank financial institutions. So meaning BSP has jurisdiction not only over banks, but as well as other non-financial institutions which are doing quasi-banking functions or other non-bank financial institutions rather, doing quasi-banking functions. And the next, they also exercise regulatory and examination powers over money service businesses, credit granting businesses, and payment system operators. So even not considered as banking institution, so long as those entities touch the area of finance, usually, then BSP would have a jurisdiction over them. And finally, its primary objective is to maintain price stability conducive to a balanced and sustainable growth of the economy and employment. So as you can see, very broad. The power of BSP is very broad. So especially when it comes to the areas of money, banking, and credit. Okay, so that is why they conduct audits of different banking and other financial institutions, not only banks. So for them to be able to discharge their responsibilities. So for us to clarify more the jurisdiction or coverage of BSP, so what are these entities that are covered by the power of this BSP or regulatory power of this BSP? Okay, so normally we call them covered entities. And covered entities are divided into several categories. So we have first category A. So category A include the universal banks and commercial banks. So UB stands for universal bank while KB stands for commercial bank. We also have foreign banks and branches or subsidiaries of foreign banks regardless of their unimpaired capital. And finally, last one under category A, we have banks trust departments of qualified banks, and other trust entities with additional derivatives authority. So pursuant to Section 613, regardless of classification, category, and capital position. And then we have Category B. So Category B includes letter A, thrift banks. Another, we have quasi-banks. We also have trust department of qualified banks and other trust entities. We also have national co-op banks. And finally, we have non-banking financial institution with quasi-banking functions. Then last one, we have category C, so which includes RBs or rural banks. We also have NSSLAs or non-stock savings and loan associations. We have local cooperative banks and pawn shops. So even pawn shops are included in the jurisdiction of BSP or Bangko Sentral ng Pilipinas. So consequently, so this categorization of the covered entities also determine the type of accreditation required for external auditors that will audit the financial statements of these covered entities. So meaning to say, usually the accreditation of external auditors are being handled by BSP also, which means that if you are an auditor or external auditor accredited by the Board of Accountancy or BOA, so you cannot just audit the bank's financial the financial statements of banks or other covered entities. There are additional requirements that will be imposed by the SEC and BSP before you can audit these bank's financial statements. So however, recently, particularly in 2019, there were development wherein the accreditation of auditors or external auditors for banks has already been streamlined and already being handled now by the Philippine SEC instead of BSP. So although BSP still has a say on the matter when it comes to accreditation of banks, so it's just that instead of having separate accreditation, so the external auditor will now go through SEC, and it will be the SEC who will coordinate with the different supervisory bodies like BSP when it comes to accreditation of auditors or external auditors of these supervised entities. Okay, so before kasi what happens is that the auditor would go to the different supervising agencies on top of their accreditation with the Board of Accountancy and SEC ban. Okay. Now, the general requirements for the accreditation of external auditors of banks include, number one, the individual applicant must be primarily accredited by the Board of Accountancy. So that's a basic requirement. So the individual external auditor or partner in charge, or PIC, should have at least 5 years audit experience. So take note that is at least 5 years external audit experience. So another requirement is, of course, this is a basic one, auditor's independence, and how it applies to bank. So we'll discuss it later on. So because there are some unique rules when it comes to auditor's independence when it comes to banks or financial institutions. So we'll have a separate discussion of this part. And then finally, number 3, so category A auditors, or this applies to category A auditors. So individual applications as external auditor of entities under category A should have established adequate quality assurance procedures. So such consultation policies and stringent quality control to ensure full compliance with the accounting and regulatory requirements set out by the different governing bodies, including SEC and BSP. Okay, but this only applies to category A external auditors. Now let's go back to the auditors' independence requirements. So let's discuss more about that. Okay, so first, letter A, no external auditor of a bank may be engaged by any of the covered institution mentioned in our previous slides if he or any member of his or her immediate family had or has committed to acquire any direct or indirect financial interest in the concerned covered institution, or if his or her independence is considered impaired under the circumstances specified in our Code of Professional Ethics for certified public accountants. In addition, in case of partnership, the limitation will also apply to the partners, associates, and auditor in charge of the engagement and members of their immediate family. So by the way, letter A is applicable even for audit of a non-banking institution, wherein you should not have a financial interest, or generally you should not have a financial interest over entities that you will be auditing. Next, letter B, the external auditor should also not have any outstanding loans or any credit accommodations or arrange for the extension of credit or to renew an extension of credit. But take note, except credit card obligations, which are normally available to other credit card holders, and fully secured auto loans and housing loans, which are not past due. So at the time of the signing of the engagement and during the engagement. Okay, take note also that in case of partnerships, the prohibition should also apply to partners and the auditor in charge of the engagement. So because these loans are also considered as a financial interest, no, in between the auditor and the bank. Okay, so but there are exceptions. So the exceptions are credit card obligations that are also available to other credit card holders and fully secured auto and housing loans. So meaning to say, even if an auditor has this type of obligations with the bank, they are allowed to audit or they are allowed to be accredited as external auditors of banks. And the last one, letter C. So it shall be unlawful for an external auditor to provide any audit service to a covered institution if the covered institution's chief executive officer or CEO, chief financial officer or CFO, chief accounting officer or controller was previously employed by the external auditor and participated in any capacity in the audit of the covered institution during 1 year preceding the date of initiation of audit. Okay, so this is to avoid what we call self-review threat. Okay, so meaning to say, if the auditor has served the bank in this capacity in the 1 year preceding of the engagement, so he or she is not allowed to audit that particular banking institution. Okay. So those are some of the unique independence requirements when it comes to audit of banking institution. So next, let's proceed to specific requirements. So specific requirements include number 1, at the time of the application of the auditor, regardless of the covered institution, whether category A, B, or C, the auditor shall have at least 5 years of experience in external audits. Second, the audit experience required in number 1, okay, so is service as an associate, partner, lead partner, concurring partner, or auditor in charge. And then finally, at the time of the application, the applicant must have the following track record. So if you're applying for auditor of category A, the auditor must have at least 5 corporate clients with total asset of at least 50 million pesos each. If you're applying for accreditation of category B clients, you must have at least 3 corporate clients with a total asset of at least 25 million each. And letter C, if you want to be an auditor of category C entities, you must have at least 3 corporate clients with total asset of at least 5 million each. So very specific requirements. And then finally, once you are accredited auditor of banks, you have specific reportorial requirements to BSP. Okay? Now, to enable the Bangko Sentral to take timely and appropriate remedial action, the external auditor and or auditing firm must report to the Bangko Sentral within highlight 30 calendar days after discovery the following cases. First, any material finding involving fraud or dishonesty. Take note, including cases that were resolved during the period of audit. Okay, so it doesn't mean it has been resolved. You will no longer report it to the BSP. You are still required to report any finding involving fraud or dishonesty, or any, take note, let me correct that, material finding involving fraud or dishonesty. Next, any potential losses, the aggregate of which amounts to at least 1% of the capital of banks. So meaning if there are potential losses, so the total of which amount to at least 1% of the capital of the bank, so you also have to report that to BSP. Next, any finding to the effect that the consolidated assets of the company on a going concern basis are no longer adequate to cover the total claims of the creditors. So meaning negative asset position na ngayon si bank. Okay, then you have to report that also to BSP. And then finally, so material internal weakness, which may lead to financial reporting problems. So if you have encountered this during your audit of bank, you have to report that to BSP as well. Okay. Another set. The external auditor shall also report to BSP this time within 15 calendar days the following situations. So first, termination or resignation as an external auditor and the reason of termination or resignation. Another, discovery of material breach of laws or BSP rules and regulations, so such as but not limited to, first, capital adequacy ratio. So because BSP set threshold of capital adequacy ratio for banks. So if the bank failed to observe that threshold mandated by BSP, so you should also report that to BSP within 15 calendar days. And finally, last, we have loans and other risk asset review and classification by the bank. Now, in case there are no matters to report, so meaning there are no fraud, dishonesty, breach of laws, etc., then the external auditor or firm should also submit directly to BSP within 15 calendar days after the end of the engagement a notarized certification that you have nothing to report to BSP. Okay, so whether there is a finding or there are no finding, you must submit a notarized statement that you were not able to find anything during your audit of a particular banking entity. So take note of that. Okay, so you should think twice if you will cover up, no, for your client. So because even if there are no findings, you are still required to report that you did not find anything that are required to be reported to the BSP under notarized certification. So very stringent your requirements when it comes to external auditors for banks. So with that, let us proceed to the questions in your handout. So let us apply the concepts that we have discussed so far. So next, question number 1. Which of the following statements does not correspond to the function of Bangko Sentral ng Pilipinas? So which is an incorrect statement about BSP? Letter A. BSP supervise banks and exercise regulatory powers over non-bank institution performing quasi-banking function. So letter A is correct about BSP. So A is not our answer. Letter B, they determine the exchange rate policy of the Philippines. Yes, so this is something to do with finance and the monetary policy of the country. So letter B is also a correct function of BSP. Letter C, BSP extends discounts, loans, and receivables to banking institutions for liquidity purposes. So in letter C, this is still correct about BSP. So in fact, this is part of their regulatory powers to over banking institution in the country. So therefore, our answer is letter D. So which does not correspond to BSP. So let's examine why. So BSP is responsible for regulating and supervising all corporations, partnership or associations who are grantees of primary franchise and or license permit issued by the government. So actually, so banks and other covered institutions, aside from primary franchise, they also have secondary franchise, so being granted by supervisory agencies like BSP. However, when we talk about primary franchise, this is not BSP, but rather letter D pertains to Philippine SEC or Securities and Exchange Commission. So therefore, number 1, correct answer is letter B. Next, number 2, which of the following is not, okay, highlight, not an accreditation requirement for external auditors of banks. So letter A, no external auditor may be engaged by a bank if the auditor has or was committed to acquire any direct or material indirect financial interest in the bank, or if the auditor's independence is considered impaired under the circumstances specified in the Code of Professional Ethics for CPAs. So letter A is required. So remember, this is part of the independence requirement that we have mentioned earlier. Okay? So next, let's have letter C muna. The external auditor should have at least 5 years of experience in conducting external audit. So letter C is also a required item for the accreditation of external auditors of banks. So finally, let's have letter D. The external auditor and members of the audit team adhere to the highest standards of professional conduct, including integrity and objectivity. So this is a basic requirement. Okay? So that is why the incorrect statement is letter B. So but actually letter B is correct too. So let's read on. The external auditor and members of the audit team do not or shall not have outstanding loans or any credit accommodation, including credit card obligations with any bank to be audited or being audited at the time of the signing of the engagement and during the engagement. So letter B is also part of the requirement for accreditation of external auditor. Only it has an incorrect part or portion, so which is this part. Instead of including credit card obligation, it should be excluding credit card obligation. Okay, because remember, this is the exception. The credit card obligation available to other credit card holders and fully secured housing or auto loans. So because as we have mentioned earlier, those are allowed. Okay. So even if you have credit card obligation or fully secured housing or auto loan that are not past due, you are allowed to be accredited. Okay. So therefore, number 2, answer is letter B. Okay. So to make it correct, so you have to replace including credit card obligation with excluding credit card obligation. So that's it for the first part of our discussion.